What's up, everyone? It's Kadi with MoneyVest. So a little bit of a rebound in the markets as expected. More specifically on the Dow Jones, though, pushing up a little bit over 1.5%, with the S&P 500 up over 1.2%, and the NASDAQ up a little bit over 1% as well. So a lot of magnificent 7-8 stocks were pushing higher, except for Tesla, which broke down below $200 per share after Panasonic came out with some concerns that electric vehicle demand is most certainly tapering off. The Treasury Department did announce funding programs of just over $700 billion in the fourth quarter, and we do have a lot of earnings tomorrow. Today, of course, we did have SoFi, we had Arista Networks, we had a couple more companies. Pinterest, for example, reported a very nice jump in revenues and earnings, rallied a little bit over 16% after hours. So we got lots to unpack and discuss in this video. Not to mention, we've got the very important Fed meeting coming out on Wednesday, which I will be live for, with the statement at 2 p.m. Eastern and the press conference at 2:30 p.m. Eastern also coming out as well. So hope you guys enjoy this video, and of course, drop a like on this market update. Make sure that you also check out the links down below for our Discord and Patreon. 16% annual discount that does expire tomorrow, so that investor early bird will go away after tomorrow. And I do want to mention that the Halloween sale right now is going on, and there's very limited spots available for that 50 to 60% discount. Right now, the coupon code is going to be Halloween, and you get lifetime access to all the lectures, all the video tutorials, all the videos. Everything's going to be available, including the downloadable spreadsheets, and of course, a lot of cheat sheets as well. So all additional content that I do add on these courses will be available to you for free. If you do, of course, want to sign up, 50 to 60% off. Coupon code is going to be Halloween. So this right here is the earnings calendar. So we did have one semi, we had SoFi, we had McDonald's, all these companies reporting numbers pre-bell, Arista Networks, Pinterest reporting after the bell. And tomorrow, of course, very, very important numbers coming out from Advanced Micro Devices. We got Pfizer pre-bell, and of course, Caterpillar also reporting before the market opens. Zebra Technologies is another company that is going to be under the radar, but I think is going to be a little bit more of an important stock because it's got phenomenal fundamentals, and we'll take a look at that company, and I'll do a specific video on them later this week as well. Not to mention, of course, PayPal, Palantir, Apple, all of them, Eli Lilly, they're all scheduled to report on Wednesday and Thursday later this week. So Apple also announces a new M3 chips and cuts the prices of the entry-level MacBook Pro. So this right here is the 3 new chips that Apple has now announced: M3, M3 Pro, and M3 Max. And we know that Apple has pretty much taken over chip design on their own hands, and they're still going to be using Qualcomm and of course Intel in some of their products, but more specifically when it comes to their MacBooks, they are now looking at, again, introducing M1s, M2s, M3s now are going to be the go-to for going forward, the chip design they're going to be using. Now, Tesla shares drop over 5% on Panasonic battery warning, down 18% since third quarter earnings report. Now, as unfortunate as this is a pretty concerning piece of news because demand for electric vehicles is most certainly coming off. And we've been having this discussion over the last 6 months, 12 months that Tesla's cutting prices not because they can. Sure, they can to some extent because costs are coming down, but they're doing it because demand is also coming down, right? So demand is coming down because auto loans and the rates on auto loans are at their highest levels in several years and over a decade, at over 7-8%. Depending on the FICO score, depending on whether someone's buying a new car or a used vehicle, rates can go as high as 12, 14, 16%. So these are pretty ridiculous numbers when you think about it, and financing has become more and more difficult for consumers, and as a result, of course, they're holding back on these purchases because at the end of the day, Tesla does kind of represent a discretionary market where people are only going to want to buy a Tesla if they can afford it, not because they need it. That's the market that we're dealing with. And if rates 12 months, 16 months, 18 months from now, if rates are, for example, lower, then that benefits companies like Tesla, like Enphase, like a lot of these other discretionary items. And I would even argue like Apple, to some extent, could struggle in a higher interest rate environment. Of course, earnings will tell us a little bit more about that. And I'm really hoping that Apple actually gives us some guidance. They haven't given us any guidance in over 3 years. So I'm hoping that they do give us somewhat guidance into the future and going into the second quarter of 2024. for fiscal year as well, because they are going to be reporting. Actually, they're going to be reporting for the last quarter of 23. So give us some guidance into the first quarter of 24, which is October through December, the quarter that we're currently in. Now, the Treasury to borrow $776 billion in the final 3 months of the year. So this was a refunding program that we were waiting for on Monday, which finally came through. And now the announcement comes 10 days after the government said the fiscal 2023 budget deficit would be around $1.7 trillion. And that's how much additional they would basically need to finance the deficit. And all that basically means is, of course, more debt, more issuances, more corporate government debt, not corporate, but more government debt and more treasuries being issued in the market. And the Treasury said it expects to borrow $816 billion between January and March. So when you combine these two numbers together, we are looking at close to $1.5 trillion at the moment. So 816, we're looking at 1.6 actually. So it came in higher than Deutsche Bank and JP Morgan's estimates of 1.4, 1.5 trillion. We came in certainly at the higher end at close to $1.6 trillion at the moment as well. And the US government's borrowing needs will decline slightly in the final 3 months of 2023 from the prior quarter, a potentially important development during a turbulent time for the global bond market as well. You know, it's kind of interesting that sometimes these numbers get lost in translation because, and I've seen this happen so many times. I posted this, Instagram reel and on Google, and one of the viewers commented that Google stock is doing terrible because their growth rate in AWS went from 28% to 21%. And I was just thinking to myself sometimes, like, how our expectations change over time is such an interesting concept because, on an absolute basis, if a company grows, that in itself should be a big plus, big positive, right? But just because the growth at which the company grew, right, the rate at which the company grew slowed down from 28 to 21%, that somehow ends up being a negative thing. And the same thing kind of applies here, right? I mean, they're saying that the U.S. government's borrowing needs will decline slightly in the final 3 months, but nobody's talking about that they are higher on a year-over-year basis. Just because the rate of borrowing is going down or is declining or is lower than the previous quarter, for example, that has nothing to do with the fact that it's still up on a year-over-year basis. The deficit's up, the debt's up. Like, that's what's somewhat interesting in the markets somehow, like how sort of people like to, or investors or just media like to kind of spin those words around to make it seem like it's good or worse, when in reality it's always the sort of like the absolute and the relative numbers on a year-over-year basis that really matter. Like, I mean, I guess, and then that's what consensus expectations also do, right? I mean, if a company hits or miss against the analyst consensus expectations, the stock moves dramatically despite posting phenomenal numbers or despite posting really bad numbers. But what really matters is what was the actual numbers and what was the consensus? Did we get a beat or did we get a miss? And that applies to, again, the current quarter, the future quarter guidance, and every single metric along the way. If the company can beat expectations, regardless of how poorly it did on a year-over-year basis, the stock can still go higher. And vice versa, right? I mean, the company can come out with blowout earnings, strong growth year-over-year, revenue, earnings, cash flows, everything grew, but they came in slightly lower than expectations, and the stock's going to tank. I mean, it's incredible how expectations can change everything. But anyway, in a closely watched announcement Monday afternoon, the U.S. Department of Treasury said it will be looking to borrow $776 billion, which is below the $1 trillion privately held marketable debt the department borrowed in July through September. Again, came in lower than the previous quarter, but it is still the highest ever for that particular quarter. And not to mention that the deficit is going to be close to $1.7 trillion this year, and the debt is well over $33 trillion. This right here is going to be the market. So very, very strong green day. And, in our weekend market updates, I mentioned that, it is possible that we do see a little bit of a technical rebound, which, like I said, is possible because of how oversold we were. The RSI MACD coming down. Percentage of stocks trading below their moving averages were also pretty low. So Google here rallying over 1.9, Meta up over 2%, NVDA 1.6, Amazon with a very nice recovery and pushing higher 3.8%, Apple up 1.2, Microsoft up 2.2, So again, pretty much the entire market was higher with a few exceptions like Tesla, of course. We had diagnostics and research stocks pushing down a little bit in semiconductors, also selling off, NXPI, ADI, Texas Instruments, some of these companies rolling over. But almost all sectors, all 11 sectors in the S&P 500 were green. And in the last 1 week, we got utilities, materials, defenses, all pushing higher with real estate, technology, healthcare, energy, and comm services, all of them selling off. And in the last 1 month, we got all 11 sectors also down. Orange juice for the win yet again, so pushing higher. Lean hogs, heating oil, volatility, everything pushing up, with natural gas and coffee prices and sugar prices also pulling back, and Bitcoin still a little bit over 34,000 and Ether just over 1,800 as well. So if you come over to the market here, volatility still consolidating sideways, a little bit under 20. Not able to break past the threshold of 23. It's gotten up to 23 once in the last couple of weeks here, October 23rd, and before that, of course, that was the March high of as much as 30. So we're not there yet, but of course, we're seeing a little bit of that pullback, down 7%, and as a result, the markets here obviously rallying on that. This right here is going to be crude oil. So a little bit of that descending triangle formation for crude, and right now just sitting at that support right over there at $81, $82 a barrel. So inside this green rectangle, if you do end up breaking down below this level, it's possible that crude oil accelerates that sell-off down to $73, $74 per barrel. But right now, of course, we do have this lower high also playing a big role in this descending triangle, definitely suggesting there's weakness in the overall price action. Coming over to treasuries, and we are sitting at just a little bit under 4.9%. So we are certainly consolidating sideways at the moment, and it is showing signs of maybe starting to pull right back down. And the reason I say that is because if you come over to the daily chart, there is a little bit of that negative divergence that's brewing. And what I mean by that is that if you take a look at the price itself, or in other words, the yield, it's made some higher highs. And you take a look at the RSI. Since then, it's actually made some lower highs. So there is some negative divergence here for yields, which hasn't happened since, if you come back, this right here was the last time we kind of witnessed a very similar negative divergence. You can see the higher high over here, and this right here is the lower high for the RSI. And then eventually what happened was we made a lower high, and then of course we started selling off. We were down over 21%. And then consolidated sideways in these levels, and then had this very nice strong rally of over 52%. Now, there is a negative divergence similar to what we have already seen, like I said, over here, but we just learned the Treasury Department is looking to raise another $776 billion, and that and then of course over $800 billion next quarter. So it's possible that again increases some supply. If the demand's not that strong, yields can certainly go past 5% and break out of that range of 5.225%, back to 5.3, 5.4. Those are levels to keep in mind for the treasuries moving forward. So going over to the markets now, S&P 500 more specifically getting a little bit of a rebound back higher, but we are still below this resistance of 41.75. So this right here is going to be that resistance. In fact, we got rejected at 41.77 here on the day, and support level is going to stay put at 4,045 for S&P 500. Talking about the NASDAQ, also getting a little bit of a rebound, up over 1%, of course, after the brutal selling pressure from last week and bouncing off of that support that we talked about in our weekend video. So that's going to be this level right here, sitting roughly at 12,550. And of course, we are starting to see some momentum back up. Resistance is going to stay put at 13,100. So this right here is going to be that level to watch for the NASDAQ. Talking about Apple. And Apple here also seeing a very nice move back up over 1.23%, and that's exactly what we discussed during the weekend video. So lower highs and lower lows, so kind of like in this falling wedge pattern, and resistance going to be all the way up to 172. So this right here is going to be that level to watch, all the way up to as much as 177, 178 for Apple. So those right there are going to be some levels to pay attention to. Of course, we're seeing a very nice recovery back up, but we are still within the context of this downtrend. So I want to be very clear that we're not out of the woods yet, that we are still in a lower high and lower low pattern, making a downtrend. Now, Amazon, with a very, very nice recovery, up over 3.8%, starting to see some signs of a breakout outside of this lower high and lower low. But we've also got a very strong resistance sitting for Amazon right over here. So this is going to be that level to watch as an area of supply and a resistance. Previous resistance we got rejected here back in July And of course, then again got rejected here back in October. So this is really going to be that level to watch initially. It's going to be sitting roughly between 134 and 135 for Amazon. Tesla, on the other hand, is starting to break down below a huge area of support of $200. And as unfortunate as it is, we've got this lower low to potentially validate some type of support that's going to be sitting at around 189, maybe 190. But in case Tesla breaks down below this, well, then we got to be ready for 151. So this right here is going to be that next support level to watch for Tesla at the moment. And right now, we're still in the context of this downtrend of lower highs and lower lows. So definitely getting a big breakdown. That's not very good for Tesla. Unfortunately, we'll go ahead and turn this level back into a resistance now, considering that we are trading below that level. And you guys already know where my fair value is in the 130s for Tesla. Talking about NVIDIA here, NVIDIA just validating that support for now. $404 was the low for the day. So getting a bit of a bounce back up, 1.6%, but it does seem a little bit weak. And this is the support level to watch. Very, very important. I mean, just like Tesla broke down below 200, if NVIDIA breaks down below 400, it's possible that we do see, the NASDAQ more specifically start to kind of rotate back lower a little bit. Yesterday was a nice technical rebound, but that was on the back of Amazon and, of course, Apple getting a bit of a lift, and NVIDIA also doing decently well, up over 1.6%. But in case we see a breakdown below 400, that's not going to be great news for NVIDIA either. And that's going to be the resistance in the 475 to as much as $500 per share for NVIDIA. Talking about advanced micro devices and AMD here, just consolidating sideways, and support level is obviously going to stay put right over here, $94, $95. This is exactly where we have traded in the past, and resistance is going to be all the way up over here to as much as 97 to as much as $100 per share. Lots of lower highs and lower lows forming here. If you do get a breakdown below 96, next support is going to be $80 for advanced micro devices. Talking about PayPal, and PayPal here continues to struggle, although up over 1.3%. So, support level is sitting at roughly $50, $51 per share. So that right there is going to be that level to watch. Of course, very, very oversold at the moment, not to mention both from the RSI and MACD standpoint. And resistance is going to be all the way up to $56, $57 in the near term for PayPal. Talking about Visa. And Visa also showing signs of weakness here. So you can see that we did have a little bit of a technical rebound, but it is still trading at a very important support. And the neckline is going to be at 228, 229. In case Visa breaks down below this, head and shoulders, which again is a possibility, then the next support is going to be all the way down to as low as $211, $212 per share, in my opinion, for Visa. But right now, again, within the context of a very nice uptrend, meaning that it is making still this higher high, higher low pattern. And the next resistance is going to be all the way up to 250. Neckline, like I said, support is going to be at 228 for Visa. Talking about Meta platforms, and Meta here on the day rebounding nicely, up over 2%, so pushing right back up. And for the most part, it is still within the context of this broader consolidation. So this right here is the range within which it's been trading, with a resistance here, support here, and that's really where we are at the moment. Again, resistance 312 to 325, support 275 to 293 for Meta. Talking about Netflix, and Netflix here also just consolidating sideways. It's got a much bigger range here with a resistance at 452. Very strong support right over here at 397, close to $400. We've got a massive gap, of course, to fill right over here. And if we do see a recovery back up, resistance all the way up to 452 for Netflix, all the way down to 348 support in the meantime for this company. Google, on the other hand, also pushing up 1.9%, although getting rejected at this resistance that we talked about at 126 for Google. So very nice rebound a little bit, considering how oversold it was. And resistance right now is going to stay put at 126. We got a gap to fill here, all the way up to 139, 140, 144. Resistance levels to pay attention to, with the support level close to 117. So, there's a lot of companies, a lot of stocks that were trading at oversold levels that are now starting to see some momentum back up, some technical rebounds for these companies. So that, I think, is very, very normal for us to see that. But, of course, I want to still point out and reiterate the idea that, look, yes, technical rebounds are okay, in an oversold market. but that doesn't necessarily mean that that's start of an uptrend. It could be, but we're not there yet, right? So for that to happen, we need to see more confirmation and some more breakouts and some more higher highs. Until that happens, I think it's important for us to stay cautious and understand that, okay, these technical rebounds can most likely fade very quickly, and we could be on that downtrend once again, considering that we have been on these lower high and lower low patterns for the overall market. Talking about Microsoft here, and Microsoft also pushing higher. Resistance is going to stay put at $340. So that right there is going to be that level to watch for Microsoft. Support level is going to stay put at roughly around $310 per share. And finally, we got Costco and Enphase to look at. So Costco here pushing higher very nicely. So the analysis is going to be over here. You can see a very nice recovery back up. Resistance is going to be all the way up to $570 with the support sitting roughly at $531. And finally, we come to Enphase. Enphase here struggling still, selling off even further, sub $80 per share. And I believe the next support for Enphase is going to be somewhere near close to, let me take a look. It's going to be closer to here at $60 per share. And yes, that is brutal, but that is going to be that next support, $59. As you can see, the previous resistance now acting as a support. Fast forward to where we are now, and that is going to unfortunately be the next support level to pay attention to. And the valuation has completely collapsed for Enphase. So if you come over to statistics, we are looking at a 20 times earnings multiple. And I think the calculated EPS for this year is 336. So if you take a look at the price today, 78 divided by 336, we're looking at a 23 times price to earnings multiple based on 2023 numbers. But if the company's grows earnings, let's say 336 times 1.2, because we're looking at a growth of 20%, it's going to be $4. 78 divided by 4, we're looking at 19.5 times earnings multiple based on 2024 EPS. So that's where we are with Enphase. And again, if you guys enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Don't forget, we've got a massive sale going on right now for another 1 day after October 31st midnight. It is going to go away 50 to 60% off. Coupon code is going to be Halloween. And as always, make sure that you drop a like, subscribe to the channel. Happy investing. I'll see you all in the next video.